Hi there, welcome to Kneppy Invest. Time to get into MedAdvisor, look at the March quarter appendix 4C. This company is looking interesting. Share price is at historic lows for this company. Not only is the share price under significant pressure right now, which has forced the valuation of this company down to pretty low levels, the company is also operational cash flow positive in the last quarter. I'd like to see that continue over the next few quarters. So MedAdvisor did a fairly big acquisition in November 2020. They raised about $45 million at a share price of 38 cents. Current share price is 18 cents. And that was for a company in the United States. So this company derives most of the revenue from the United States. And the current CEO has retired, and they do want a new CEO who is based in the United States. So what does MedAdvisor actually do? They do have apps, and their platform allows individuals and carers to manage all aspects of prescription medication use. So I'm not completely across this company in terms of competition and all that sort of thing. I would think there's a fair bit of competition in this space. Even pharmacies, I would think, would be sort of heading towards this area. So I think that is one aspect. You'd have to really do some further research when it comes to MedAdvisor, just the competitive space right now in this area. So just a few facts in regards to MedAdvisor. I call this business, or describe this business, as being in the healthcare tech, medication management. A company was founded in 2012 by Josh Swinnerton and listed on the ASX via a backdoor listing through Exalt Resources in November 2015. I've already mentioned they did that significant acquisition of, the company was called Adheris in November 2020, which was not quite 18 months ago, about 18 months ago. And the reason why Robert Reed, the current CEO and managing director, is retiring is they want the new CEO to be based in the United States. Again, most of the revenue is derived there. And we'll actually have a look at how they compare their operations in the United States versus Australia. And they are doing quite well in the United States. Two of the largest shareholders of MedAdvisor are Perennial Value, 9.2% stake, in EBOS, 7% stake. The last time I did a video on MedAdvisor, which was after the September quarter results, so it would have been October or November last year, the share price was about 38 cents and the market cap was about 140 million. Now the share price is 18 cents and the market cap of 68 million. And because this company is much lower valued and they're not burning through a lot of cash, unlike they were doing a few years ago, they actually did generate cash in this current quarter. I think this company is looking interesting at current prices, but there is a reason why the market has punished the share price of this company. It could be just overall negative sentiment in the market, but there may be some issues within the company itself. So I would want to explore those potential issues. And I've already mentioned just a competitive space in this area. And the ticker code for MedAdvisor is MDR. Now let's have a look at a couple of MedAdvisor's Appendix 4C. We're going to look at two, 1 year apart. We'll go back to the March quarter financial year 21 and compare it to the most recent quarter, just to see how this company has progressed. If we go back to the March quarter financial year 21, this is just after they made that acquisition of Adheris. So you would think some of that cash flow from that business in the United States would have been flowing through to this quarter. Maybe not, because there is a big difference, a big increase in cash receipts from this quarter to the most recent quarter. So this particular quarter, they received $9.9 million of receipts, so just shy of 10 million, nothing too bad there. But the noticeable thing about this particular quarter was the cash burn. They did burn through $8.4 million just in operations, which does seem fairly high when you compare it to the previous 3 quarters. They actually only burned through about $2.3 million of cash in those previous 3 quarters. So I'd probably like to know why they burned through so much cash in this particular quarter, and would it continue for the next few quarters? So more than likely, when I saw this particular quarter back in the March quarter, so it would have been April 2021, I probably would have pushed it aside simply because of the cash burn rate. And because they're burning through a lot of cash, probably spent a little bit of money on the acquisition as well. The cash on hand actually decreased from 21.2 million to $10 million. So that means because of the cash burn rate and the cash on hand, there would have been concerns about this company needing to raise capital again if they couldn't decrease their cash burn. So I would have had those thoughts as well last April. Now, the situation has improved for MedAdvisor over the past year. When we take a look at the most recent Appendix 4C and the statement of cash flows, receipts grew, almost doubled, but they grew by 8.2 million and finished at 18.2 million for this particular quarter, a little bit down from the previous 2 quarters. However, their spending has actually decreased in some areas, particularly product manufacturing operating costs fell by $3.5 million from 1 year ago. They are spending a little bit more money on staff. Staff costs did grow by $1 million. But overall, with cash receipts rising by $8.2 million and some of these costs actually dropping, this company was operational cash flow positive by almost $4 million in this particular quarter. Now, they weren't quite as successful in the previous quarter, but if you looked at year-to-date numbers, cash receipts up to 60.5 million, and the company is operational cash flow positive for the first 9 months of the year by 3.4 million. If they have another really good quarter like we just saw, this company could be operational cash flow positive for the financial year of maybe more than $5 million. And because this company doesn't burn through a lot of cash in investing financing activities, a lot of that cash they produced in operations fell to the bottom line. So the cash on hand actually grew from 5.3 million to 8.8 million. The company does have a little bit of debt. So this is the one slight negative thing. And the reason I do find this negative, so the amount of debt is 6.7 million. So it's not too high, but you do have to look at this and take it into account, because when you look at the particulars of this loan facility, the interest rates on it is 10.25%. So I would prefer the management of this company to try to pay down the debt as soon as possible, because the interest on that debt would be approaching about $500,000 per year. And that's a fairly big sum when you are just being above operational cash flow neutral. So this could make a difference for this company over the next few years. The other thing I want to look at is just their regional performance, how they are performing in the US compared to the rest of the world. I've already mentioned that the new CEO more than likely will be based in the United States, and there is a reason behind that. Just when you look at the receipts of customers in this particular quarter, 14.6 million from the US and only $3.6 million in the rest of the world. Not only that, in the United States, they were operational cash flow positive by $4.3 million in the US and actually were negative in the rest of the world. And if you look at the year to date, $7.4 million of cash flow, positive cash flow in the United States, negative $4 million in the rest of the world. So I can understand why this company is targeting the United States, why they want their CEO to be based in that country. Now let's have a look at the cash receipts history for MedAdvisor, going back to when they backdoor listed onto the ASX way back in late 2015. And from when they backdoored on the ASX through to the time they made this acquisition of Adherus in November 2020, cash receipts were growing at a fairly slow rate though. So if you go back to the December quarter 2016, $1.3 million of receipts, and then the September quarter 2020, just before the acquisition, $3.5 million. So this company was growing at a slow rate, but this acquisition really put the turbocharger into the growth of receipts. We saw receipts grow from 3.5 million in the September quarter 2020 to 21.2 million in the September quarter, just 1 year later. And that was their record quarter in terms of receipts. Now, I did mention that the previous 2 quarters were better than this quarter in terms of receipts. This is just a one-off. And they did mention some reasons behind that. So I do think there is potential. We're going to see receipts go above $20 million in the next quarter. And I think the trend is still up for MedAdvisor. So the very fact that they're operational cash flow positive, receipts are heading up. Probably the only thing I'm unsure about this company right now is just the competitive landscape in regards to what they do. And to be honest with you, the market is unsure about MedAdvisor as well. If you look at the chart, but if you are a contrarian investor, now could be the time to take a position in this company, because the share price at the end of closing on May the 10th was at 18.5 cents. And if you look at the weekly chart, so this goes all the way back to late 2015 when they backdoor listed onto the ASX. We haven't really seen a share price this low in the past. We haven't seen share price get towards 18 cents back in 2018 and 2017. But over the last 4 years, the share price has been well above this level. In fact, the share price has been as high as 65 cents in 2020. So that was about June 2020. So share price has really been under pressure during the past 2 years, and maybe we have seen capitulation in the last few weeks. However, in saying that, usually when you do see capitulation, you do see heightened volume, and we haven't seen much volume over the past few weeks. So I think it's just the lack of buyers right now. There's no one willing to buy into this company, and it is surprising that this company was operational cash flow positive in the most recent quarter, and there was no interest from the market at all. In fact, the share price has decreased from there. So the market is not liking something, or maybe the market just hasn't really discovered this company just yet. That's all I have for this March quarter Appendix 4C video for MedAdvisor. If you don't know a little bit more about this company than I do, I'd love to hear your opinion. There is a few things I want to do a little bit more research on MedAdvisor, in particular the competitive landscape. I would think there's going to be a bit of competition there. I would not be surprised to see quite a few pharmacists trying to get into this area of medication management. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.